Hey guys, welcome back to the channel. Hope you are doing well. Today's video is the memory trap. Now, there was a number that was floated today in a few news articles that quite frankly was shocking. And I know a few of you saw it on the channel as well. You reached out and you were equally as shocked. I would say that this number would probably even make the most bullish Wall Street analysts recheck his or her math. And that number is $1,200 a share. That's right, $1,200 a share from Micron. It's the new Giga-cycle price target that we're seeing floating in the market. And just imagine that. A company like Micron that was trading at about $100 a share a year ago now sees price targets that are 3 times where the stock trades today. You may think that sounds like a bubble. That may sound like madness, but in reality, that's the position that Micron it is. That's how they've perfectly positioned themselves to meet the demand of the market today. So we're going to take a look at the articles that justify that price target. 2 analysts that have put it out, one bullish at 1,200, one below, but still a nice upside for where the stock is today. And then we're also going to take a look at 2 other factors that could help Micron reach there, that are creating more of a bullish sentiment for the memory sector. And those factors are the AI Giga-cycle. So we'll explain what is the AI Giga-cycle. And we'll also jump in and look at the margin trap that we see some of our big hyperscalers and other big traditional companies facing right now with the prices of memory. But before we do all of that, hit like and subscribe to the channel. I want to take a moment to just thank each and every one of you. It has been amazing to see the growth over the last week. I truly appreciate all of the time you've spent on this channel, watching the content, engaging with comments. I really appreciate how we're growing a community together, and I encourage you to keep doing it. I answer every single comment. It's a blast. I want to keep this ride moving forward. And if you haven't subscribed yet, do it now. I appreciate you guys. So let's jump in and take a look at the articles to start off the video. I want to look at the 2 analysts that came out today. Both were from Motley Fool. One was James Hire. I'm going to show you his article first. So James was a little more bullish of the 2. James is basing his price target on the trailing 12-month PE ratio. You can see here above, he's looking at both the current price to earnings ratio, trailing 12 month, as well as the projected earnings per share by the end of the fiscal period for Micron in August, and says he could easily see the share price exceed 1,200. It seems like a massive elephant in the room. It's a massive number. So let's see just how he's reaching that math overall. And if I scroll down, as I mentioned, it's a simple calculation of looking at the trailing 12-month PE. For Micron, it's currently 39.3. And you multiply that by the consensus earnings per share for the stock. First, we'll say the trailing 12-month PE of 39 seems high, but what James says, it's actually trading relatively low compared to other tech hardware players like NVIDIA at a 46. But when you compare that to consensus earnings per share, which is $32.45 for this year, then you get a share price target of $1,275.60. It seems like it's madness, but the math is there. And he even went on to say that if I do it based on a low estimate for earnings per share and a high estimate for earnings per share, I get additional numbers, right? Looking at the low estimate for earnings per share would be $30.28. If you did it with that number, you get a price target of just over $1,100 for Micron this year at the end of August. If you use the high EPS forecast for Micron of $36.24, you get a price target of over $1,400 a share this year. So James goes on to say, as long as Micron maintains its current PE ratio and it meets and exceeds earnings expectations in 2026, it could easily exceed $1,200 a share at the end of August. Very bullish. Now let's take a look at what the second analyst had to say. Also from Motley Fool, this was Adam Spatico. Adam wasn't as bullish, but still a really nice upside for the stock. And Adam looked at it, instead of using the trailing 12-month PE, he looked at it with forward PE. So I'll scroll down and show you. There's a graph in here that I just have to stop and show you because it made me stop and look at it. And it's the estimates for revenues as well as EPS for Micron. If you kind of look at the graphs on where they've grown, we've seen this parabolic growth with the company. But the reality is, if they finish where they are, we're estimating them to hit $76 billion in revenues this year, which is an 81% growth in their revenues. And their earnings per share would triple to just under $34 a share. So Adam used those and he looked at a multiple of 12x for forward PE from Micron and compared that, just first looked at how do the other leading companies in the semiconductor space, what is their forward PE? And you can see it on the screen. NVIDIA with the 25, AMD 32, Broadcom and Taiwan Semiconductor significantly over Micron's. So if he said nothing else, he would say that it's trading at a steep discount today relative to the other AI semiconductor stocks. He did address the fact that those others that I mentioned you see on the screen have a significantly larger addressable market in the AI semiconductor space. But nevertheless, Micron is trading at a steep discount. So if you take the NASDAQ 100 index and use that as a surrogate marker, their forward PE is 25. And if we base that on what we think the earnings per share will be for Micron, you get a share target, a price target for the stock of $843 a share. That's $105 upside from where we trade today. Really bullish. I know each and every one of us as shareholders would love to see that performance through by the end of the year, by the end of their fiscal year, August. Now, Adam does say that this feels bullish, right? He says that doubling this year could prove to be very daunting for Micron. But at the end of the year, he feels an appropriate price target for Micron would be in the range of $650 or more. And I'll go back and say that each and every one of us as an investor, if I said right now, you could see this stock get to $650 by August, about a 50% increase from where we trade today, I think we all would sign up for that. That's still an amazing bullish sentiment from those analysts. So those numbers are floating out there right now. We're going to think about what kind of an impact that will have coming into the morning bell tomorrow. But there's two other factors that I want to discuss. One is the AI Giga-cycle. The other is the margin trap. These are both benefiting memory companies. They're benefiting Micron. And first, let's define what we mean by the AI Giga-cycle if you haven't heard it before. This is the 2026 evolution of what we used to call the super cycle. While super cycle, as you know, was a period of high demand for memory that lasted a few years where we saw consumers rush and buy products that needed RAM and other memory. And then that demand faltered over time. It was a traditional boom bust cycle that we saw. Well, the Giga cycle now describes something different that we're seeing in the memory world. It is more of a permanent structural shift in how much memory the world requires. So Giga cycle is not a new term in the sense that it was invented yesterday, but it has only entered the mainstream financial lexicon probably within the last 6 to 9 months. And it's been used to differentiate the current explosion we see from the prior boom bust cycles that we traditionally saw with memory. We are on the verge, as you guys know, of the semiconductor industry hitting a $1 trillion, reaching $1 trillion in annual revenue. And it's happening because the AI models that are being produced right now, like the new ones, like NVIDIA's Vera Rubin, don't just use memory, they devour memory. And each of these next generation chips requires 288 gigabytes of HBM4. And here's the secret, as you know, and we've talked about in this channel, HBM4 takes about 3 times as much silicon to produce as regular RAM. And we're estimating, or analysts are estimating, by late 2026, 70% of all high-end DRAM production will be consumed by the data centers. So that means there's only 30% of all the other high-end DRAM production that could be used for smartphones, PCs, and even our cars. And so while the supply is shrinking and tightening, we see the demand is expanding. And our hyperscalers, whether that's Google, Microsoft, Meta, Amazon, they are spending tremendous money, and we know they're expected to spend over $700 billion this year. And much of that profit or that money that they're spending is going to go into the pockets of Micron and going to the financial sheets of Micron as profit. So this is a massive boost for memories. This AI Giga-cycle, if we are in this permanent phase now, is a massive boost for the memory companies and will help their valuations and help them drive towards these price targets. The other area that we see is this margin trap. And we have seen it on the news recently. It's in the current 2026 market context, the market trap refers to a specific economic situation where the companies are squeezed because Their revenue is staying high, or they're driving high revenues, but their profits are dissipating or disappearing because the cost of ingredients are getting higher, and particularly the cost of one specific ingredient, which is memory, and that would be DRAM, NAND, HBM, what do you call it? Those prices are rising faster for companies than companies can turn around and charge consumers for their products. So it's shrinking the margins for these companies. It's putting in this margin trap that we're calling. And Cisco was a great example last week. Their stock took a massive hit after their earnings because their cost of goods skyrocketed. They're caught in this margin trap nightmare, Cisco. The memory they need for their routers has jumped by 95% in a single quarter. So if you're a company that's building a server, a car, or a smartphone in 2026, you are trapped. Prices are driving. You've promised your consumers one particular price, but companies like Micron and other memory companies have just doubled or even more, tripled per se, the cost of memory, which is the most important component in the products that you need to deliver to your consumers. This is a historic transfer of wealth. The profit that used to belong to companies like Apple, Dell, Cisco, you name them, is now being sucked out of their balance sheet, and it's being transferred to Microns and other memory companies. It's a zero-sum game, folks. Micron is winning on this side of the equation. This is another great bullish sentiment for the memory companies, and particularly Micron. This margin trap, but it is a double-edged sword. If they raise their prices too high, they very well could hurt the customers they rely on to buy their products, and it very well could limit or pull back the orders that they're seeing from these customers. So they have to be careful with the price increases. And in full fairness, I think when you look at a number like 1,200, you think it sounds amazingly high. And there are a few areas or a few bears, I would say, the bear case, or some people that are not as bullish on Micron as all of us. They really look at three factors. One, and I think the CFO addressed this the other week, but they continue to point to the Vera Rubin performance rumors that we see with Micron. Now, that's been independently tested, but if that continues to hang around and that continues to create a perception for Micron, it may cause them to lag behind their competitors in this space. And if NVIDIA turns more to SK Hynix or Samsung to fill these orders, Micron could miss out on the highest margin slice of the AI pie moving forward. The second area is just the CapEx cliff and the cash flow overall. In this giga-cycle that we're in right now, we see that Micron is spending money at a high rate. They've raised their fiscal 2026 CapEx to a record $20 billion, and they've actually added another $7 billion for the specialized HBM facilities. The bears will argue that if the AI demand cools at all, or even slightly in 2027, that Micron will be left with billions in debt and massive empty factories that they can't afford to run. And I think the last piece, I just addressed it earlier, is just demand destruction. We're seeing the first signs of customers starting to pull back, giving guidance they're going to ship less of their product in future quarters. We heard from Apple and Tesla, they've signaled that memory costs are starting to hurt their 2026 product margins. We also saw a report that some of the Chinese smartphone makers are trimming their 2026 shipments by about 20% because of prices. So this is another area from a bearish perspective that we just have to keep our eye on, could have an impact overall on the stock. But as we head into tomorrow morning, I have one question for all of you listeners out there. One, is Micron a buy for you at 411? Will we break through the 420 resistance level that we have seen with this stock? Will we finally break through this week with all this bullish sentiment that we see in the news and everything surrounding the memory companies? Will the headlines and the movement we see this week, will it be a potential roadmap for Micron to reach those price targets by the end of their fiscal year in August? Clearly, this giga-cycle is here. In my opinion, it is here. We are starting to see permanent shifts, structural shifts. The traditional boom-bust cycle of memory is beyond us with this AI demand and the AI build-out we see in the marketplace. And for the first time in tech history, the boring memory stocks, or the boring memory sector, might be the most exciting place to trade stocks and trade overall in the tech sector. But let me know what you think. Is 1,200 a dream, or is it a destiny for Micron? Let me know your thoughts overall. Drop some comments below. Love to hear your feedback on the video, but I hope you had a great night. I hope you guys had a great holiday if you're off today, and I look forward to seeing you in the next video. Take care.